Oh shit, you just hit the live button? Bro, you can't do that. It's a Monday. I barely had my coffee, bro.
No, it's live. It's live. It's live.
Oh shit. Welcome everybody. Good morning.
Welcome to Crypto and Coffee, where we drink about coffee, talk about crypto. And I'm the Data Lord, and this is Jaime,
Good
our
morning.
lovely Jaime. And the show, if you're new, is we go over technical analysis, teach you how to look at the markets in general from our perspective, and we're professionals in the Bitcoin and cryptocurrency space. We're giving people an understanding of why some things might be pumping, might be pulling back, might be not moving at all. And then we also go through all of the most important news stories for the day. And so our hope is to help educate everyone and do so in a way that's entertaining and is community focused, so we can continue to build tools that are worthwhile. I'm of course not on set today. Normally I have a cool studio. I'm out and about doing who knows what. I'm looking for SBF. That's actually what I'm doing. I'm looking for it. But
You are closer for sure. You are
I'll
closer.
show you some of my things later on. But anyways, looking at the markets, shall we? And let me whoop-ah. There you go. Yeah. Oh, my eyes. Actually, it looks terrible. This looks way better. Yeah. And everyone, if you would say what's up in the chat, we love to give people shout outs later on in the show. So you would, you're part of the show too. So just say what's up. Bitcoin, we are at 22K, huh? So Bitcoin has had some interesting price action. Good old 9% up in the last 24 hours. So Jaime's got a lot to say about that. Ethereum's a copycat. It just does whatever Bitcoin's doing because it's trying to pretend it's an equally as important cryptocurrency.
Yeah, it got permission for Daddy Bitcoin.
Yeah, Microsoft said it was okay. And then looking at BNB, recently they had some resolutions on the Binance side. And so that's what you see BNB also kind of mirroring what's happening with Bitcoin. And then USD coin, that's another one that's actually related to Binance and its resolution. So we have a story on that today. And I think that...
Look at that dip on that chart. Look at that.
Oh, our first story, we'll talk about that.
It's supposed to be a stable coin on USD, the one you just mentioned.
I know, it's so bad. We see Ripple doing nothing because there's no decision on Ripple yet. Cardano is pumping because Silicon Valley pays for it, in my opinion. Seriously, like if you look at the news articles, and Jaime and I are constantly like looking at the news, we're finding that like things aren't even important happening in Cardano, and they're still reporting on it, which just tells me that like they have deep Silicon Valley pockets, and they're just paying for people to write articles for them to pretend that they're relevant and create some noise floor. So I don't know if that's completely true. That's my hypothesis, and so that's why we don't cover a lot of things on Cardano unless I actually think that it's like truly breaking industry formations, right?
Mm-hmm.
Polygon Matic is following a little bit of that wave we saw with Ethereum because it's basically a sidechain for Ethereum. And then we see Doge, which is basically a sidechain for Bitcoin and Litecoin, also following suit. So yeah, we're looking pretty nice and green. Litecoin's functionally a test net for Bitcoin, and Litecoin is up 11.7%. So that's what I mean by you'll see parity between coins that are very related because a lot of times their prices stay the same because a lot of times their code stays the same and their user base stays the same because sometimes people will use a lesser network in order to test their greater networks. So pretty interesting stuff. Jaime's got some opinions on
Let's jump in there. All right, guys. So this is a very important day. I moved it to the 3-day, but let's zoom in very closely on what occurred this weekend. My apologies. When I left you on Friday, we're headed south below the FTX breakdown. And of course, we're calling and asking everyone to pay attention to the 200-day moving average. Look how beautiful that test occurred. It came straight down to it and tapped it. The big question, and it was even pushing slightly below The big question is, and there's quite a few levels here, the 19,500 we've been speaking about for months, the 200 daily moving average, and also a weekly support level. So it's a pretty thick, just as we were looking at the top back in the day with the other ceiling, this is a pretty solid foundation. Now, if you look, it's actually performing, it's bouncing between levels, and you can almost predict what those levels are. So it shoves down through the 50. It tries to stay below. There were even complaints that it was so slow or not much trading. And then all of a sudden you take this dump. And this is triggered by Silvergate, the Silicon Valley Bank, and a few other events. It hits the 200 daily moving average, and now it came back up over the weekend to retest the 50. Here's the big question. Will it close below, or will it rise above and then test it as support? We have to watch what happens now. And on the chat, there's a very important first, here we go. Biden press conference at 9 a.m., which should be in right about now. So you can jump over there on the other side. And First Republic Bank stock is tanking hard, is what Roller Scratcher just mentioned. So here's what's happening. We're going to watch what happens here. I usually, you guys already know me, I trade on the 3-day usually, because that's, to me, it's the lowest for swing trades that I would get into, where it's very hard to fake out movements. Well, on the 3-day, if you look at the candle, it's above the previous red one. That is a bullish engulfing. And that candle closes tonight at, I think now with a time zone change, it may be at 6 p.m. tonight. Watch where this closes. If it closes above, that's a bullish reaction to it. And we could see the $28,000 mark. If we hit below it, then we move now to the daily and see what is going to transpire with this moving average. So we're looking for confirmation on where it hits. And all this, it pertains to the news that we're also looking at. If we move up to the weekly time frame, there you go. On the weekly, you can see we're still testing. Although it's last week proved to be a pretty exciting week. We still have a doji. It should have been green for better confirmation, a cleaner confirmation. But if you notice, it came straight down. It missed that by $59. That little level I placed for myself. So I missed it by $59, but now we got to watch what's happening on the weekly. On the weekly, we're still below the 50 moving average. And this one, of course, does not close until the end of the week. So that's why we focus on the lower time frames, like the 3-day. Today should be a nice indication of what's going to happen the rest of the week. If it closes above this red one, making this a bullish engulfing, we should see some upside for the rest of the week. And we're also watching what happens to Standard & Poor's. It dropped below an important level, and this chart does not belong to me, by the way. This one is from Gareth Soloway, and he's looking for a retest of the bases. So if you zoom all the way out, this is a base he's looking for to confirm a nice bounce off of. So wherever the traditional stock market goes, Bitcoin is kind of linked. But if you look at the news that's been happening over the weekend, they're also mentioning, hey, Bitcoin was created as a response to all these bank failures. What's going on? And that's where the big question is, and we should keep an eye on this, is will it decouple from bank failures? So if the banks are failing, will Bitcoin perform by design, or will it follow? And that remains to be seen. So it's an exciting time to be in. Meanwhile, Brandon, the team, and all the OGs present continue building forward. And that's pretty much where we're at on the price action.
Word. I mean, that's so good. I'm loving the fact that like you got robbed by $59.
I know. Oh! And this would have been a nice little swing up, you know.
Oh my
And
goodness.
as soon as it touched the 50 on the 3-day, I would have said, well, let's see if it touched it though. Meaning that would I have taken profits on it? So let me move to the daily. And yes, okay. So if it would have hit below on down here, just by freaking $59, it would have closed the trade right there. And that would have been a nice, let's see. Boom. A nice 17%, guys, in a single weekend.
Dude.
But sometimes the gods do not smile upon you. They will smite you.
Yo, give us stream a like and a comment and just flame Jaime for missing his mark by $59.
It's a kick, man. But life happens, guys.
It does. Life happens, man. So before we get into the stories here, I just want to say what's up to everybody. What's up, Boston? I see you, brother.
Good morning, Boston.
Yeah, what's up?
Indo crypto.
Looks like Low Roller Scratcher was the first one in our stream here, bro. So
good morning, Low Roller.
So I respect you. Indo Crypto, what's up, brother? What's up, crypto fan?
Good
and
morning,
Gundy with the big yo, with the yo.
Yeah, always good seeing you.
Morning financial crash rise and shine. Smell the traditional markets burning in the morning. You know.
Yeah, I mean this was turning into a bank room, guys.
Yeah, and I'm not shocked. Like everyone in Bitcoin who's been here for a long time, like none of us believe in like the longevity of the current system. And so I don't think the system's going to fall off a cliff. I think the system's going to just bleed out slowly, and then it'll find itself with some reform. But in the meantime, we'll just keep building stuff that doesn't need their permission, and we'll work like that. But getting into our,
you know what, Brandon? Let me say just this, guys. If it does not go up to the $28,000 level, and we continue dropping, my next level is 18,250. Everyone's looking at 18,500. I'm getting a little greedy. Hopefully I don't miss it by $2, but it's around that range area is what I'm looking at. So we'll see what happens. So I'm removing the 19,500 buy. Why? Because now it's way too close. Now I know there's stops all the way down there. So I'm looking to the next level below. The big question is, will it happen? We'll see.
Yeah, Wall Street jumping out window. I hope nobody gets harmed. I hope people just become crypto heads instead.
Yeah, and we're going to deep dive into that right now.
The water's fine, it's fine. It's fine water. So this is hilarious. So there's a Bitcoin flash price to $50,000 on Binance because once the USDC peg went back into effect, someone basically fat fingered, and in fat fingering, they like
oh Lord,
they yeeted the price. Look at that.
And we see that. Don't we see that every time there's a top or a bottom? We see a wick in one direction or the other. It's crazy, bro.
Someone, I don't know if that was bots or if that was like someone who just had like his stops and stuff wrong because didn't figure it'd be a big deal because USDC wouldn't do that, but that's what happened.
Yeah, it went down to 87 dollars.
Yeah,
instead of 87 cents per dollar over the weekend.
So enough about trading for a little bit. Let's get into some technical stuff. So Brave browser. If you're not using Brave browser, I recommend you do use Brave browser. And I can't give financial advice, but I can give technical advice because I am an architect, so I can do that.
And Brave for the record, Brandon has enforced that across our entire structure and corporation is Brave browser. So it's very secure, and my faith is in Brave now. Thanks for the proof of concept.
So you don't gotta like on Chrome and whatnot. You have to install ad blockers. You have to install privacy blockers and all that. So Brave doesn't play like that. But by default, it has all the security controls on, and all of the Chrome extensions totally work with Brave. So if you're not currently using Brave, I suggest you look at it, just download Brave browser. But they recently just allowed a crypto wallet in it. They've had for a while because you can get basic attention token just for using the browser. You get paid crypto for just using the browser. Pretty crazy. But now they added this wallet function, and they are adding a whole bunch of full-featured wallet capabilities to help increase Web3. So let's read this. So privacy-focused Brave browser announced on Friday the rollout of a new feature that will allow users to not only buy cryptocurrency, but also now to sell it for fiat, including US dollars, euros, and British pounds, without leaving the integrated Brave wallet. That's huge. Self-custody and the not your keys, not your coins mantra have regained momentum following the collapse of the prominent crypto firms like Celsius and FTX. Brave said it aims to make crypto self-custody easier with this new desktop browser feature, which is powered by crypto on-ramp startup Ramp Network. So after recent events with the centralized exchange mishandling customer funds, it's more important than ever to offer security and easy to manage self-custody. Totally agree. Music to my ears here. The company said in this post here, so according to Brave, users in select countries can now sell their coins for fiat, including Ethereum, Solana, USDC, and Brave's own basic attention token. The company said that 38 cryptocurrencies can be sold via the off-ramp service. So while self-custody has grown in popularity over the past decade, the most common way to hold digital currency and tokens remains with centralized exchanges, the company added. We expect to see that shift with innovations in user experience like the one we are releasing today. So they are completely on the mark here, dude. Like if we're gonna see people actually move into self-custody, the only way that's gonna happen is if it's easy. Like for real. Like people are not gonna change their habits unless it's easier. And so if like the end user experience isn't good, if like our tools aren't easier to use, cool story, bro. Like that's it. It's just cool story, bro. So yeah.
And they've been leaders ever since I ever entered crypto space. They've been fully engaged with the blockchain technology, with crypto overall. So it's a good company and all about privacy. So it's part of their philosophy, and now to make it even easier, where you don't have to go to a centralized location to perform your business and transact. They're actually giving you the chance to do it straight off of your storage wallet. So this is great.
Yeah.
Great. Oh, I don't know if you said good morning to Jizbasi. Jizbasi, good morning.
Not just Jizbasi, girl. What's up? I see you.
Good morning.
How can I forget the queen? How can I do that? You can't. So Brave Browser, they are barking up the right tree. I want to see more tools like this. I want to see more tools that are just taken for granted. They're just there. No one's got to be a crypto head to use them.
Yeah.
They're just as easy as you can make them. So our next story is about Ethereum and it not being a security, according to a crypto think tank, Coin Center. So this story brought to you by Daily Hodl. The crypto advocacy group Coin Center spelling out why it believes Ethereum is not a security, despite claims to the contrary coming from the New York Attorney General, Letitia James. In a new lawsuit against the crypto exchange KuCoin, Attorney General James argues Ethereum is a security that relies on the efforts of third-party developers to generate profits for its holders. The Attorney General calls ETH a speculative asset and placed the leading smart contract platform in a group with the collapsed project Luna and its algorithmic stablecoin Terra USD. Coin Center's director of communications refutes the NYAG's assertions and says he thinks the think tank's view on Ethereum remains unchanged. Obviously, we disagree with the NYAG's argument that ETH is a security. Coin Center will be monitoring the case. If there's an opportunity to weigh in, we will. In 2018, Coin Center published a blog post explaining why it believes Ethereum is not a security. The group argues that while Ethereum may have met one of the prongs of the Howey test when it was issued in 2014, ETH in its current form today is not a security. So under the Howey framework, a transaction represents an investment contract. If a person invests his money in a common enterprise and is led to expect profits solely from the efforts of the promoter, sponsors, or other third parties. According to Coin Center, Ethereum in its current iteration is too useful and too decentralized, and that ETH's value does not rely on the efforts of a discernible third party to generate profits. The value of Ether and the functionality of the Ethereum network is not reliant on the Ethereum Foundation. Rather, it flows from the efforts of thousands of unaffiliated developers, miners, and users. So, conflating the pre-sale and the runner network is confused analysis that could be misunderstood, standing the tech or the law or both. So, I think that's a fair thing to say, actually. Personally, I think that Ethereum has gone through some evolutions over the years. It's changed. It for sure was a Howey test security when it first launched. It has kind of grown past that point now, where we do see people who don't even talk to each other who are developing in the space, and that causes the price to go up or down. So, in that capacity, it's not coming from one location, but
Yeah,
I don't know.
I see it as a network,
Yeah.
a network or a platform where all these others launch. So it's like you said at the very beginning, there was a reason and purpose to launch, but
Yeah.
Vitalik and the team that launched it took Bitcoin as the platform and launched their own with all the same principles, but added smart contracts to it. So you
Yep.
could apply and reach consensus. So if you notice, the whole purpose the entire time has been to deploy a blockchain network with consensus mechanisms that you can apply contracts into. Now, the people that are launching on top of Ethereum, that's where you have this question of, okay, guys, are they launching it for a business now, these smart contracts or this network? Just like when we launch, I don't know, a Microsoft network or any of these type of platforms, there is that question now and I don't know about staking, if that has centralized it. I'd love to hear your thoughts on that, Brandon. But
Yeah, I think that when we use the term centralization, we need to be specific about what we're meaning, because I think you can have centralization of control over like validation nodes. You can also have a centralized store of value, right? So if one person owns a majority of the funds on the network, then they could really whale on price action. They can't necessarily override your transactions, but and make it not worth much or make it worth way more depending on how they choose to whale it around. So I think that we also have centralization of development. Like, is it one team developing tools for this, or is it a lot of people? And so, the speculation of price action is decoupled from one specific party, right? So, for example, like Terra Luna, if Do Kwon was to do things that were knowingly deceptive or have some sort of scandal, the price would probably see a huge hit because that one person represents the network, right? As opposed to at this point in time, Vitalik's just sort of a dork that people use as a mascot, for Ethereum. If Ethereum were to be caught having some sort of Epstein Island orgy or something, like it probably wouldn't affect the price of Ethereum as dramatically, right? You see what I'm saying? Like, he's decoupled from the organization itself or the platform itself. So I don't know. I think there's a lot of ways we can look at centralization. Either way, diversity makes us stronger, and not artificial diversity, but true diversity of ideas and locales and people being people, right? So, Logo Scratcher says Signature Bank went bankrupt. Coinbase has $420 million, but USA government bails out Signature Bank yesterday. Yeah, man, I'm so over the bank bailouts. It's clearly just like an aristocratic class.
Yeah, and we'll see an article coming up where you can see why the feds got involved and who the people involved are with this USDC.
Yep.
So it's almost like it's not so much saving crypto, it's more saving the traditional banking. Crypto is the excuse in this case, just because they are crypto friendly.
Yeah. Keeping on the Ethereum topic here, our next article, hackers exploit Ethereum rival normal activity pause to prevent theft of more tokens. So the layer 1 blockchain Hedera had to pause normal activity this week due to a hack on its smart contract service code. The Ethereum competitor acknowledged the exploit in a tweet on Thursday. Today, attackers exploit the smart contract service code of Hedera mainnet to transfer Hedera token services. Hedera token service tokens held by victims' accounts to their own account. The attacker targeted accounts used as liquidity pools on multiple dexes that used Uniswap version 2 derived contract code ported to use the Hedera token service, including Pangolin, Hedera, Saucer, Swaps, Labs, and HeliSwap DEX. The attackers moved tokens obtained through the attacks over the Hashport network bridge. The bridge operators detected the activity and took swift action to disable it. Hedera says it turned off mainnet proxies to remove the hackers' access to mainnet and prevent them from stealing additional tokens. On Friday evening, the Hedera marketing chief officer announced Hedera was back online. The total value locked on Hedera plummeted from $36.8 million prior to the hack to $24.5 million on Friday afternoon, a more than 33% decrease according to DeFi Llama. The TVL of blockchain represents the total capital held within its smart contracts. TVL is calculated by multiplying the amount of collateral locked into the network by the current value of the assets. HBAR, Hedera's native asset, is trading around almost 6 cents.
Yes.
At the time of the writing, which is roughly equivalent to what it was priced at prior to the exploit. So this is why we don't copy and paste smart contract code, friends.
Mm-hmm.
This issue, from what I'm understanding here, this part right here, they copied and pasted Uniswap v2 derived contract code, and they refactored it to work with their tools. But when they did that, there was an exploit that existed on that contract code they copied and pasted. And so they got wrecked because, from what I understand, they copied and pasted code and they didn't actually quality assure it themselves. And so this is like a big warning to anyone. It's not to say you shouldn't use GitHub and you shouldn't copy and paste code to understand it, but just do yourself the favor of writing your own code. If it's going to be on your platform, just actually write your code.
Yeah. And at least in worst case scenario, okay, it shortcuts you to do it, validate it. Look for exploits, look for things they missed. If you're taking already a shortcut to get the code, okay,
Right.
make the extra effort to validate it, or trust, but not don't trust, verify. It should be your philosophy when you do this type of thing.
Yeah, I mean, you can even trust and verify if you'd like,
Correct.
But,
yeah, that's true.
But yeah, people, you're going to keep seeing that happen. People are just going to keep copying and pasting code, and they're going to get wrecked for it. But even with like AIs like ChatGPT now, you can have it look for exploits in the code. So if groups aren't at least doing that, in order to hunt down exploits, then I can't help them.
Yep. We just watch at that
point.
Yep.
I get yourself some popcorn is what you can do.
Yeah. And if you notice, they went back to a code of a previous version from Uniswap. So that means that me, the one who copied the code, should have looked at when the next patch came through to go look at what they changed, so I can now come to my code I copied to update it and see, okay, this is what it's supposed to do. Boom. But that wasn't done.
Yeah. And so best practices prevent you from playing yourself. That's the takeaway here. So Adam Bulls watch closely as Cosmos Interchain Security prepares for March 15th launch. So This is really interesting, actually. Cosmos is really focusing on security this year. And so this is a good faith investment into that security upgrade. So let's read the article here. So Cosmos Governance has approved the V9 Lambda upgrade, including interchain security and possibly kicking off a virtuous real yield cycle. The Cosmos community has approved a vote to add replicated security, or RS, to its chain with 99.99% of votes in favor of the motion. The much-awaited upgrade is set to go live on March 15th, 2023, and the V9 Lambda upgrade. RS is the first version of Cosmos' interchain security, or ICS, feature, allowing the blockchains in the Cosmos ecosystem to share a validation resource for improved security. Only protocols approved by Cosmos' governance will be added as consumer chains in the upcoming update. 8 consumer chains are potential candidates for selection, including Neutron, Polymer DAO, Duality, Stride, Simply Staking, Fairblock, and Comdex. Cosmos' interchain security could start a virtuous real yield cycle. The replicated security feature will distribute up to 25% of consumer chain fees to Cosmos Hub stakers. The protocol can also allocate a portion of token inflation and revenue streams to Cosmos stakers. The ICS implementation allows consumer chains to focus entirely on the growth of the network's economy, as Cosmos Hub validators provide reliable security against 51% attacks and double spending. This will bring additional yield to Atom stakers and allow consumer chains to optimize for growth. The staking reward for Atom, after adjusting for inflation, is 6.82% with 24.37% annual returns. That's ridiculous. Mm-hmm. Yeah, Atom is really a high-paying chain if you're into staking. The additional consumer yields will improve Atom holders' annual yields, encouraging more buying and staking activities. Neutron is a smart contract platform that will likely be the first consumer chain to use the new ICS feature. Avril Duthiel, the general manager of Neutron, told Cointelegraph, as a result of RS, Neutron does not have to inflate the Neutron supply continuously to keep validators honest or pay staking yield to governance participants, since they do not contribute to securing the network. She then added, instead, Neutron can afford to have a fixed supply, a release schedule index on on-chain activity, and a constant buy and burn pressure from Neutron's 3 streams of revenue. This will allow the consumer chains to focus on the blockchain's real yields and bring additional yield to Atom stakers as the price increases. Consequently, high yields for staking Atom will motivate more users to purchase and stake Atom, hence potentially giving rise to a virtuous investment cycle in the Cosmos ecosystem. So, the rest here is just price speculation, but we are seeing a wedge form on, Atom, which typically you have a breakout to the upside if it's looking promising on the platform. People are just trying to find out what the price should be. And what's up, Ann? Good morning to you.
Good morning, Tamp.
Yeah, the Tamp. Interchain and mesh security, not either or. Yeah, so you got to basically dual wield, and that's what we're seeing with the Cosmos ecosystem. There's just a lot of very, very thoughtful people who are architecting things to just be very robust, and they're making it available to everything else on the Cosmos ecosystem. So I think that approach is really wise.
Precisely, and one of the powerful things about the interchain versus cross-chain. Cross-chain is where you communicate. You do your own business over here, and then you can communicate it to the other chain. And let's say I'm Coca-Cola. I finally bought Pepsi, and they chose one chain. The other one chose the other chain, so you can cross-communicate. The interchain, or the mesh is what they call it, is now it allows, like in the example of this article, to you focus on your business itself. If you're looking for a consensus mechanism outside, so you don't have to worry about the consensus itself or validation or 51% attacks and all the technical aspects of it, just focus on building. Cosmos is that platform. And within the Cosmos ecosystem, you have proof of stake, you have staking, you have, I'm sorry, proof of stake, proof of work through the Cadena that's integrated with Cosmos. So you have so many mechanisms to choose from. So if you're a developer or a company that wants to incorporate blockchain, you can look at the Cosmos ecosystem and cherry pick it. Hey, you know what? I want to use this consensus mechanism, bring this, all these layers, and build it out to your needs as a business moving forward. So it is a very, it's the next layer to move forward. So as Tamp said, you can rent validators from the hub and focus on what value you bring to the chain instead of all the other pricey things it takes to get the chain running. So they become kind of like the Amazon, the Walmart, the distribution layer, where you can just pick what you need as a business and you continue focusing on your business model. You just entrust this whole entire ecosystem to do the validation for you. And it's a great model to look at. And if for you guys to, here's a little speculation. I couldn't help myself. I wanted to jump on the Cosmos Atom chart on the weekly. We're looking at the weekly chart at this moment. We're currently, we came down, this is the 200 moving average on the weekly, and this is the 50 moving average. It seems we are going to be able to pick it up on a cheaper price. We may retest this bottom around $8.86 or maybe up to $9.55. So we should see that confirmation coming up in the next few weeks. And at that point, if you're looking to, again, these are funds you should look to speculate on, things you can afford to lose if it's something of interest. But this is an ecosystem that I'm seriously looking at for the long term because they are building in this bear market. And this is a bear. We're just looking for the bottom at this very moment. So it's pretty exciting what's coming also. And the opportunity to get involved, it's right here.
Yeah, and that's the thing. Like when we're in a bear market, you want to be looking for chains that are still building and actually releasing promising updates. They're staying on their roadmap. There's no scandals, and according to all of our auditing and research, Cosmos does fit that pretty well. So this is not investing advice, but according to that logic, there's the things I want to see being represented inside of Cosmos. So.
Precisely. And it just had a death cross where you see the green one coming down to the red. That's usually a bottoming signal where everything, we now are looking for the absolute bottom. So the timing's good. The chain is building, but it's up to do your own research. And if you're looking to implement a blockchain technology for consensus for your business, this is one of those you should add to your list to do your audits on. So not financial advice. We're just sharing what we see in the ecosystem. That's all.
Yeah. Well said there. So let's look at our next article here. So the banks are down. That is why Bitcoin was created, the crypto community says. This is in reference to the Silicon Valley Bank stuff we were talking about earlier. So the Silicon Valley Bank collapse on March 10th has sparked fear, uncertainty, and doubt, or FUD, across the crypto community. The Silicon Valley Bank collapse on March 10th has sparked fear, uncertainty, and doubt across the crypto community, leading many to return to crypto roots, reviving the Bitcoin white paper published just weeks after the Lehman Brothers meltdown in 2008. There's an entire generation of builders who only read about Lehman and the financial crisis and scoffed at Bitcoin. Now their eyes are wide open. Welcome, new friends, stated Ryan Selkis, founder of Masari. In shock, that is all. The speed at which all this is happening is unbelievable. Approximately 6 weeks after the dramatic collapse of the Lehman Brothers, the fourth largest investment bank in the United States at the time, Satoshi Nakamoto, released the now famous white paper paving the way for the emergence of the Bitcoin network. Some people blame the Silicon Valley Bank failure on the rising interest rates in the United States. The Federal Reserve increased its benchmark rate over the past year to more than 4.5%, the highest rate since 2007. In January, the inflation rate in the US was 6.4%. Add interest rate driven bank run to increasingly long list of things I did not think I'd see in 2023. That's great. That's funny. Many crypto and tech companies are affected by the collapse of Silicon Valley Bank. A Federal Deposit Insurance Corporation issued bank was about to shut down operations when USDC coin issuer Circle initiated a wire transfer to remove its funds. Circle revealed it could not withdraw $3.3 billion of its $40 billion. So it may sound like a lot of money, but that's a drop in the bucket compared to what they had. 3.3 billion of 40 billion, leading to a sell-off and the stablecoin's price dropping below its $1 peg. Man, brutal. So less than 24 years old and already experienced the first bank run. Oh, little baby. The stablecoin ecosystem felt an immediate effect as the USDC depegged from the US dollar. USDC's collateral influence prompted other stablecoins to depeg from the dollar. The DAI, a stablecoin used by MakerDAO, lost 7.4% of its value due to USDC depegging, Cointelegraph reports. Unstable coins. Sorry, that's funny. Other popular stablecoins such as Tether, Binance USD continue to maintain a 1-to-1 peg with the US dollar. Circle said it is now joining other customers and depositors in calling for the continuity of the Silicon Valley Bank, which the company alleged is important for the United States economy. Circle stated on Twitter that it would follow state and federal regulators' guidance. So if the Silicon Valley Bank was shut down by the California Department of Financial Protection and the Innovation of Undisclosed Reasons on March 10th, California watchdog appointed the Federal Deposit Insurance, is that right? Insurance Corporation as
FDIC.
the FDIC. Everyone loves FDIC. As the receiver to protect issued deposits. However, the FDIC only issues deposits of up to $250,000 per depositor, institution, and ownership category. So what this is saying is that this is nothing new. We've seen this before, but we're seeing it again. And this is opening a lot of people's eyes to like the realities that the banks aren't as secure as they can obtain to be. They come off as being way more secure than they actually are in practice. And so like if Circle has $40 billion and they only ask for $3.3 billion of that, and that gets denied, then that means that there's a lot of money that they don't actually have. And so if a lot of people come calling, you're going to see a bank run, and very few people are actually going to get their funds is the issue.
And if you think about the mechanics behind it, and that's where our financial system is flawed, like globally, not in states, globally. It's fractional. So if I bring in real $10 and to the bank and deposit it, they can actually loan out a multiple of the real money. So what does that mean? They're loaning out air. They're loaning out. It's just part of the mechanism. Imagine if I could do that with gold. Like, let's go back to gold. I brought gold. Here's my gold bar. And they loaned out now 3 or whatever multiple of the fractional reserve system allows you to do it. Whoa, where's the gold? Like, fuck. So now people that are borrowing it or investing in it, they're like, okay, oh yeah, I can take $10 worth of gold. Here it is. But now when there's a bank run or these interest rates, they don't have how to cover it. I come back. Hey, can I get my $10? And now Brandon comes and everyone else comes. They don't have it, guys. They don't have it. That's where Satoshi Nakamoto is like when he wrote in the white paper, and he actually alluded to that huge bank failure that transpired as his first signature on the first block ever minted on the Bitcoin. It's these bank runs. It's like the fat boys take care of each other and screw everyone else. The problem with the conventional currency is all the trust that's required. Banks must be trusted to hold our money, but they lend it out in waves of credit bubbles with barely a fraction in reserve. So you realize that's our problem. And a very good Tim sums up the past week in banking pretty well. So imagine now Circle, who has a USD pegged token, all of a sudden asks, and they, like Brandon just said, they didn't ask for all of it back. We didn't need this much to cover our commitments. And now you see a DPEG. They're like, oh shit, SVB had a bunch of it. And from their perspective, it's a bunch, but not from Circle's perspective. And now there's a run. So that's where there you go, Gundy. Stock market it just halted. All right, guys. So it's not looking pretty overall, but that's Satoshi's point, guys.
Yep.
Is it's on air. They blame Bitcoin as it has no, what's it called, backing, but goddamn, neither does our US dollar.
Well, I'd argue Bitcoin does have backing, so I wouldn't say neither. But
agreed.
Bitcoin is backed by the sheer amount of security that enforces everyone to play by the same rules.
Which is
so that's
by
different.
Power
that's
consumption.
the difference.
Yeah.
Well, and even if it wasn't, it'd be backed by cryptographic security. So the idea is every single person on the entire Bitcoin network has to play by the same rules. There are zero exceptions, as opposed to in the traditional markets, we have a lot of people who have exceptions. A lot of people who get, they're too big to fail, so their business is okay. They can make miserable financial decisions, and it's okay. They'll still be able to go home, to one of their 5 very, very large homes and vacation with the family on their yacht. There's no actual repercussions for their bad decisions. Meanwhile, they leave a bunch of other hardworking middle-class people typically holding the bag, right?
Yes, and so, Bitcoin is deflationary. There's a limit, a cap, a ceiling that cannot be changed or moved or transformed. Nothing. It's 21 million grand total. So that's also opposite to the fractional reserve system. So it's
Bitcoin in design is neither inflation or deflation, but in practice, because people are losing their keys because they're mismanaging funds and operational security, it is acting deflationary. It's acting like less and less tokens are actually in supply because people keep losing their wallets. But once we hit 21 million, it won't be deflationary technically. It'll just be in function, right? But
yes, unless they keep losing their keys, then it continues.
So
deflationary, bottom line is you cannot mint a single extra. That's the total supply. That's all there'll ever be. So if you lose the keys, that is moved out of circulation, so you cannot get it. And the other point about it is the fact that for a basic, someone who's beginning, well, what happens when you mint the last Bitcoin? Well, now instead of minting, you're getting a fraction of the Bitcoin being processed as a transaction fee, which is still minimal versus what banks and other financial institutions charge you to hold your money.
Yeah, so there's an introduction of supply that gets tapered off as adoption grows, and it'll get to the point where people are just securing transactions, and they'll be paid purely for that. So, yeah. Indo says so the price of Bitcoin might go up today. We'll see. It certainly has some inputs. So our next story: Bitcoin rising on report, government weighing plan to protect all Silicon Valley Bank depositors. So the price of the largest cryptocurrency, Brief, rose back above 21.5 thousand before giving back some gains, right? So the price of Bitcoin rose to 21.4 thousand after the Washington Post reported that the U.S. federal authorities are considering safeguarding uninsured depositors at the Silicon Valley Bank should a buyer not be found for the institution, which collapsed last week following a $42 billion bank run. Roughly 85% of the SVB depositors held money in accounts that were not FDIC insured, meaning that without federal action or an outright purchase of the bank, those funds could be irretrievable. Yay. Seeking to avoid panic in the financial system, officials at the Treasury Department, Federal Reserve, and Federal Deposit Issuance Corp discussed safeguarding all uninsured depositors or uninsured deposits, the newspaper reported, citing 3 people who spoke on conditions of anonymity. The government action would be a possible fallback position should an ongoing auction for the bank yield or fail to yield an acceptable buyer. Bids were due earlier this afternoon, the Post said, citing 2 people familiar with the auction. Without a rescuer or purchase, companies that banked at Silicon Valley Bank may have difficulty meeting payroll, and checks or wires initiated right before the bank's collapse may fail. The price of Bitcoin rose on the news of possible rescue or purchase, jumping to as high as $21.5 thousand. In recent trading, the price of the largest cryptocurrency by market cap was $21.4 thousand, up more than 4% in the last 24 hours. Yikes.
Yes.
Maybe
And
they get their money, maybe they don't.
yeah, well, they did. Yes, agreed. Now, this is a disaster for people like us, like all of us, like it's mentioned here, payroll outside of crypto. This is what's transpiring for them. Is if this goes down, and now you see why FDIC stepped in and everything. Like, okay, you know what? Let's make this whole, and that's what triggered this news, which I'm going to go watch for Biden to speak, because he actually mentioned they would step in to stabilize over the weekend. So I guess the official announcement or details were released this morning at 9 a.m. And take a look at Indo. You're absolutely right. Here, let me show add to stream. Look at Bitcoin, guys, on the 3-day. This is a bullish engulfing, and we have 10 hours left on this candle, so we should watch it. If this closes above, we should see a nice little pump for the next couple of days, or the rest of this week, and to see where in the world this pump will end, or top off at. So 28,000 is the next big, well, 25,000. So if I move over to the weekly, I just couldn't help myself, Brandon. I'm sorry. I just want, so we're
Hey,
coming.
you can whip out the big green one. It's fine.
So we have this dragonfly doji right here, which is usually a reversal pattern. It's red, so but we're coming up to the 50. The next top off, the next level to look at, if we break this, is 25,450. After that, now we move into the historical shit, like the 28,980. Why is that one important? Is because during the run up, let me hide those golden. Here we go. During the run up, that level was tested by Bitcoin as support multiple times before continuing to the double top. Came back down, held it, and then broke down. So that's why 28,000 level is very, very important to watch, where this red hand is that I marked. That there's a weekly resistance, and there's a monthly and 6-month and annual resistance at that level. So if we break this, that's our next stop, guys. If we break that, shit, I'd say we're back into the bull run again. If we test as support, of course, it has to come back down, test it, and then spring right back up. So we're in pretty exciting times. This is the one I'm watching today, is on the 3-day. If this closes tonight above, let me give you guys a level to look at. A level to look at. And Wednesday, we'll come and review it. If we close above 22,282, we have some exciting times coming, or week, at least week or weeks coming forward for the end of March. We will watch this, guys, and report back on Wednesday for sure.
Yeah. Thanks for that, Jaime. The very last article for the day. So Biden reassures Americans that the banking system is safe in the wake of this collapse. So U.S. President Joe Biden assured American citizens that the banking system is safe following the collapse of Signature Bank and Silicon Valley Bank. Yeah, it's super safe. It just exploded, but it's totally safe. Americans can have confidence that the banking system is safe. All customers who had deposits with these banks can rest assured that they'll be protected and have access to their money as of today. That's a bold claim.
It means they just minted, guys. They just backed it up without declaring a mint. They just minted.
Yeah, so that's literally what he's saying. Hey, we're just going to inflate the cost to the general American public, and it'll be fine. Biden's address and maneuvering announcements, and the maneuvering announced by the regulators over the weekend, is an attempt to halt further bank runs. U.S. financial authorities assured full return of Silicon Valley and Signature Bank customer deposits on Sunday. Biden repeated a statement released over the weekend that no losses will be borne on the taxpayer. Well, by creating inflation, you exactly did that to every single person holding a U.S. dollar. You deflated their purchasing power, is what happened on an economic level. Deposits will be available for employers and small businesses affected, while investors and bondholders will not receive a similar government backstop. The actions that we took today were designed to limit the consequences of the depositors' outflow from Silicon Valley and from Signature, and to reduce any spillover effects. The Federal Reserve Board, the Treasury Department, and the Federal Deposit Issuance Corporation said in a joint statement. Silicon Valley Bank was closed down by a California regulator after it failed to meet a surge in outflows on Friday. On Sunday, a New York regulator seized Signature Bank to protect depositors. Both financial institutions intersect with crypto, as Signature Bank works with stablecoin companies and Silicon Valley Bank works with tech startups and venture capital firms. So, yeah, some bold claims here. What's your opinion on the functional bailouts here?
2008 all over again, guys. Now it's the banks that are having the runs. It happened in 1929. This is the problem with our financial system, is how do you back up something that has fractional reserves? I mean, that concept, even though they declared it as a brilliant mechanism for the world and money, it's not functional when the market goes against you, when the interest rates go against you. It's just not a good thing. So for them to step in and try to reassure, the results are what you see in the market today. They're stopping trading on banking because of this run that's going on. So yeah, this is what Bitcoin was created for, was precisely these scenarios. Now we got to see if now's the time for Bitcoin to shine, or will it take a dump with the rest of the market? And then once the banks realize, because they were capped by the World Bank or the World Organization of Banks at 2%. You can't have more than 2% Bitcoin in your coffers. But what did they do? They went for gold. So even the banks themselves, the central banks, are going after other assets like gold and Bitcoin to secure their savings for a reset, is kind of what it's looking like. So yes, we're there, guys. We're at the gates of Hades at this moment on the fractional reserve banking.
Yeah, and that's just why you need to be supporting your family and the businesses around you using Bitcoin, because there's no Federal Reserve that moves puppet strings with Bitcoin. There's no aristocratic class with Bitcoin. Everyone's the same. Everyone has to play by the same rules. And so it is a more moral form of money. And as it gains more and more adoption and prominence, we can basically take the gun out of the hands of people who are going to do us harm with their bad banking policies. So,
yeah. And looking for their benefits, not yours. They're supposed to secure your money. Nah, they charge you for holding it. They charge you for using it. They charge you. Bitcoin doesn't do that. Yeah.
Yeah. And for anyone who's interested in reading on this specific topic here, there is a gentleman by the name of Ludwig von Mises, who was a Austrian economics person who he wrote exactly on this. He basically wrote about the prototype of Bitcoin back at the beginning of the 20th century. So if you're interested in really getting an understanding of how this whole token economics stuff works and why Bitcoin is so brilliant, Ludwig von Mises is a good place to start there. But thank you everyone for joining us here on Monday. This was fun. I know we have a shit show for a news cycle right now, but I mean, hang on tight. It's going to be fun. At the very least, you're going to scoop some bags because it's going to make the price go up and down. So
yes, and we'll see what is.
Bye, Jaime. Jaime left us apparently, so we'll see something. We don't know what, but until next time, thank you for joining us here on Decentralized TV, Crypto and Coffee. I'm the Data Lord. That was Jaime, and now it's a black hole named Jaime. And until next time, we'll be here on Wednesday. Keep calm, huddle on. Elbows! I love that it says elbow, elbow, elbow cough, and you think it's doing this, but it's actually just elbow cough. God help us all.